Stocks slide due to rate hike odds increase and Google's $110 billion disaster. Hi, everyone, and welcome to Insights, brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, Branko is joining me to update us on all the latest market updates, including that recent RBA rate rise and some interesting news out of the US with changing Fed sentiment and quite an embarrassing situation happening for Google. So how's it all going today, Branko?
Good. Just a bit of a wrap up today, talking about some of the US overnight moves and the RBA announcement on Tuesday that occurred.
Yeah, that's great, because it would be good to get there has been a lot happening there, and it'd be good to get a bit of your insight onto what you think about some of those things. So can we start off with that RBA rate rise, 0.25% on Tuesday? What was your sort of take on that? How did you interpret what happened and sort of what the RBA was saying?
Yeah, I think it's in line with what expectations were. I know Alex was on Monday calling for a larger rise, but this was what everyone was expecting. One note that I'd like to make, though, is I think in Australia, obviously, we're very reliant on our housing market, probably compared to most developed nations. So I think we're going to be less likely to increase as much and keep pace with the rest of the world with these rate rises. So that kind of adds further fuel to this notion that we're going to be a bit slower in keeping up with the rest of the world with their increases.
Yes, and Alex did certainly make that point. Like, she absolutely expected that it would be 0.25%, but her point was that really a 0.4% or a larger one was needed. And she was actually backed up later in the week because, or after she'd spoken on Monday, because I think some of the other banks had come out and said sort of something similar, that we really are getting a bigger gap occurring when we sort of just trickle along at this rate. But to your point, do they really have a choice? Because how much can over indebted households bear?
Yeah, like we have the largest household debt in the world, and every 0.25% goes up for Australians hurts a lot more than it does for other countries because of that reason. So it's a lot more difficult for them to raise rates here for sure.
So it's certainly one we need to keep sort of paying attention to, because it works, I suppose, as long as everyone else is approaching the end of their rate raising cycle. But if it's continuing on, we'll have no choice at some point.
Yep.
So sort of leading on from that, you were talking about the Fed and the news out of the US. So can you give us a little bit of background? I know in the news article today, you were talking a little bit about sentiment. What was your take on that situation?
Yeah, it's just, as always, you've got to follow what the Fed's doing in these times. And pretty clearly, they want to continue down the rate hike path, and terminal rates, like the market expectations for the Fed rate in the future has gone up. So people are a bit more hawkish now. And then that comes on the heels of these unemployment figures that came out in January. We saw 3.4%, which was very low and much, I guess, better than expected, you could say, but also kind of worse than expected if you were hoping for the potential alleviation of these rate rises. So a lot of the sentiment is just around the labour market being strong, and therefore they can continue lowering inflation. So that's the continuation of the theme at the moment.
And I know from some other commentary that I was listening to this morning, actually, they were saying Powell, when he was speaking about that, he's certainly saying that higher for longer rhetoric, but the way he was delivering it, he's being sort of referred to as grumpy, the grumpy chairman, because it's being very strict and very hard on the market. But the way he delivered this one was almost lighthearted and joking around with the press and that sort of thing. So it's definitely a bit of a feel of a change of what's going on there. Did you sort of take that?
Yeah, that is an interesting perspective as well, of the tone at which it's changed as well.
Yeah, because you can read between the lines a little bit through those statements that maybe the Fed is at the moment following the markets, not so much leading the markets, because it's sort of done what it intended to do for the first bit, and now it's sort of waiting to see what happens next to determine what it's going to do next, so it can just tread water and make some jokes.
Good point.
Speaking about jokes, well, a very interesting bit of news that you pointed out today, And I actually had to go look this up after I read it to go, wow, that was fascinating. Tell us about the Google situation.
Yeah, so they had their, I'm sure everyone here knows about ChatGPT, which is like the AI engine that is kind of taking the world by storm. And Google was trying to introduce their own version of that, which is chatbot Bard or Baird. And they had its first live demo yesterday, and it got the questions wrong, and it was a massive flop. And the market just absolutely tanked and crapped all over it. And NASDAQ was down and Google was down like 7%. So, personally, I think it's a bit of an overreaction because I think that, they can fix these problems. But I think it's good to follow this race that we're going to be seeing for these like chatbots, because the amount of the user base that chatbot GPT has developed over the past probably 2 or 3 months has been like astronomical. Like already has millions of users. So the race for these tech companies to kind of enter that space is going to be an important one. And this flop that we saw with Google's chatbot and the effect it had on the market, we could see the market continue to have a greater area of focus on this race,
on how that AI is working. It's really fascinating when you say like how quickly this has happened. It was only, I think it was the 30th of November that ChatGPT was released.
Yeah.
And we're still early February. So it's such a short period of time, only 2 and a bit months that tech has been out there. And from the numbers that I've seen, it is the fastest adopted technology in the history of the world of anything, just because people have gone and checked it out and had a play and are looking at ways they can use it. So I think this move it's a little bit comical, obviously, from Google, stuffing it up as they have, but they probably feel that they don't really have a choice, because I know Microsoft releasing sort of who's partnered with the ChatGPT stuff and doing all of that. They were talking about integrating that into their Bing search engine. Now, Google would have to be very concerned about that, because it would only take that functionality coming out even just a month or two, because we've seen it's only been a couple of months. If you've got sort of a couple of months head start, that can drag a lot of people away from using Google, which, let's face it, Google has been the one that everyone has used. Bing has not been successful at all in attracting large amounts of users. But if they're first to market with something that actually works, that should be a real concern for companies like Google.
I was going to say, if this actually makes people use Bing, I mean, this would be a huge win, because I don't know anyone that uses Bing. So,
well, I installed the app on my phone the other day, and I went, "Wow, I've never had the Bing app on my phone ever." Because who uses Bing, right? But all of a sudden, I have to have it there to get on the wait list to try out their new AI tech. So that's pretty interesting.
Yeah, I mean, for them to already have that in place, and then Google's still struggling to build their own, that's quite an advantage to Microsoft. But this is definitely something we have to keep following, because it's really, I think, going to be a major player over the coming years. This whole space. I mean, the comparisons between ChatGPT and like companies like Facebook, like it took Facebook years to get as many users as ChatGPT did in 1 month. Like, it's unbelievable, the rate of growth. And we're going to continue to see that to continue to grow as it becomes, has more mainstream adoption.
And evolving so quickly, because it's not just looking at those big companies implementing it. It's also looking at what everyone does with that technology, because that creates another tool that creates a whole lot of spin-off smaller startups and things as well.
Absolutely.
So really, really fascinating. I'll change track again. The last question I sort of wanted to ask you about was oil, because I know this is something you've been looking at. Oil companies being quite profitable. That's what you were talking to me about. And I just wanted you to sort of dig into that a little bit for us.
Yeah. So one thing I found interesting was, some reports came out the other day, and all the major oil companies in the US, their combined profit for 2022 was $219 billion, which was more than double the previous year of about 100. So all the major oil companies have doubled their profit for this year. Now, a lot of that has to do with the war, but that is quite an astronomical figure. I know oil prices were higher during that time, and outlooks and forecasts for that probably have them potentially continue to go up. But just something to continue to follow, that the success of these oil companies. And if you are someone with a stock portfolio, maybe you need to have a portion in oil at the moment, given what's going on, and given the fact that this war doesn't seem to be ending necessarily anytime soon. That could this trend could continue, because it's quite an astronomical figure.
And I'm quite interested to see how that plays out, because as you sort of mentioned there, there's the potential for higher prices ahead. Some of the predictions I've been looking at are saying, well, the price has come down quite significantly, but it is probably looking to take off again. So, if we're looking at higher, if it's already very profitable and we're looking at higher prices again, that's it really does require a little bit of additional thought, because that does flow into other markets that we look at. Like there's always some sort of correlation between the underlying economy and what's happening with the oil price. So that's something to look at there. But also when we start talking about gold and silver, there tend to be correlations there as well, aren't there?
Absolutely. That's a good point to monitor.
Yeah. All right. Well, thanks, Branko, for diving into all of that for us today. A lot of news to keep an eye on. So it's good to have you sort of bring it all together as you have for us today. So thank you for that.
Thanks for having me on.
And thanks everyone for watching. Remember, if you've got questions or comments, social platforms are the place to sort of put them in. We're always monitoring those, and we'll get back to you on there or speak about them on the show whenever we can. So that's us for this week. I'll be back with Alex on Monday. So until then, everyone, have a great weekend.
See ya.